Bring in show music, please.
This is Squawk Pod, and I'm CNBC producer Cameron Costa. On today's episode, from burritos to baristas, Starbucks' new CEO, Brian Niccol, was poached from Chipotle. And now that he's leading the iconic coffee brand, he sat for an exclusive interview with our own Andrew. And he shared his big plans for a Starbucks turnaround.
We just made the announcement about not charging for alt milk so that we're going to make our pricing architecture more transparent, easier for people to understand.
Oat milk upcharge, no more. Our team has other ideas too.
It's obvious to me, taco flavored coffee.
Big buyer of that.
Taco, maybe a burrito flavor.
And you've seen it on your counter, in your closet, or on your social media feed. It's SharkNinja. CEO Mark Barrocas talks about his many, many products, like a new slushie maker.
That product has only launched 6 weeks ago, and it has 200 million impressions already on social media.
Those conversations, plus Elon Musk is in hot water over his $1 million giveaway, and our parent company Comcast has some big news this quarter. It's Thursday, October 31st. Happy Halloween. Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody, and welcome to Squawk Box right here on CNBC. We are live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin.
And Starbucks' new CEO, Brian Niccol, announcing fundamental changes to its strategy. The company reported quarterly results after the bell. It missed expectations on same-store sales in the U.S. and China, something we knew was in the offing. I spoke with Niccol yesterday in an exclusive and wide-ranging interview, and his first TV interview since taking the helm of the iconic American company.
The thing that I get most excited about is I think if we get our business back to being about, first and foremost, the coffee, the craft, that moment where the barista hands somebody their beverage, I think people just re-fall in love with the brand. And, it's an iconic brand, it's an enduring brand, and I think all those things got validated for me in the last 8 weeks.
During yesterday's earnings call, Niccol outlined his plan to bring down the time for customers to get their drink to 4 minutes or less. I'm going to show you his comments on how he plans to make that actually happen, as well as changes to the pricing structure and so much more. And we batted around a lot of ideas ourselves, I think, over the years about how to improve the Starbucks situation. But he's got a ton of them.
It's obvious to me, taco flavored coffee. It's the first thing.
Big buyer of that.
Taco, maybe a burrito flavor of some kind.
I think the biggest is getting it
less,
delivered in
less
4
flavors.
minutes. Less flavors, getting it delivered
less
in 4
flavors,
minutes,
less money.
making it simpler.
Less money.
Although somebody said they get like 30% of their sales now from those crazier drinks, the new flavors. And
That's so one of the things we talk about later, and you'll see is, look, the highest margin drinks are the most complicated drinks.
Right.
But if you believe that that's really a gating factor to just throughput, and the reason why there are lines, and the reason why, if you could.
Why the average
consumer
would get turned off?
You may not want that. The other thing that they're doing is, things like what are called alt milk. Right now, they upcharge you for that kind of stuff.
Yeah, but they're going to put it back out front.
That's going to be free now.
Yeah.
They're going to have it, and they're going to make it actually out front where you're going to do it yourself. That's something
Which
that customers have wanted for a very, very long time.
Yeah.
So I think you'll see a lot of the moves, and you'll see a lot of them. Actually, I think that kind of stuff you're going to see quickly.
I think it's probably all the right move, but it could be painful if you're going to lose some of these other things along the way. So it could be
It's not milk. You don't got milk if it's alt milk.
If it's almond milk, if it's not.
You see udders on almonds. If you see those, don't eat them.
The next thing we'd like to do is to announce today's winner of the $1 million prize.
A judge has ordered Elon Musk to attend an emergency court hearing in Philadelphia this morning to address a bid by the city's top prosecutor to stop Musk's $1 million voter sweepstakes. The lawsuit accuses Musk and his American PAC of operating an illegal lottery and trying to influence voters in the presidential election. Attorneys for the Philadelphia Attorney General asked the judge to order enhanced security for the hearing after the DA was targeted by some anti-Semitic attacks on social media. One account on X posted the DA's home address and wrote that He loves visitors. Mask up and leave all cell phones at home. The NASDAQ is the fly in the ointment. The wrench in the works is whatever it is, but that's what's happening. These companies, the stocks have done so well, but there are a couple that are down today, Meta and Microsoft, both sharply lower. eBay is on that laggers list. Earnings of $1.19 a share beat estimates by a penny. Revenue also was above, but current quarter guidance fell short of what analysts were expecting. The company's CEO said the guidance was due to a number of one-time factors, including hurricanes at the beginning of the quarter and shoppers being distracted in the run-up to the presidential election in November. He also warned that there are 5 fewer days now between Thanksgiving and Christmas this year compared to last year.
So you better start shopping.
So
because
weird. Where'd they go?
Thanksgiving is late this year.
Now I see. So there's
still crunch time. You think you can wait till Thanksgiving, but you're going to have a lot less time.
There's still 365 days.
Yes, but Thanksgiving alternates on where it falls.
We'll get them back. And that's my point.
You get the days back.
We're not really losing. But it's just, you know what I'm saying. I was worried for a second. If that starts happening, that's all I need. Getting older and shorter years would be horrible.
That would be an issue.
We got some breaking news about our parent company this morning on the earnings call, telling investors that they are considering spinning off the cable channels that are owned by Comcast, perhaps including CNBC and some of the others as well.
We are now exploring whether creating a new, well-capitalized company owned by our shareholders and comprised of our strong portfolio of cable networks would position them to take advantage of opportunities in the changing media landscape and create value for our shareholders. We are not ready to talk about any specifics yet, but we'll be back to you as and when we reach firm conclusions.
They're also looking for potentially a partner for Peacock. The stock moving on the back of both the earnings this morning, but I think even more so after making those comments on the call. The stock up now about 8%.
It would be to
on
shareholders.
The back of that news. It would be to shareholders. It would be interesting to see whether the Roberts family, which of course has a controlling stake in Comcast, in those shares of a spun-off company, would also want to control those.
I think they're thinking about the entertainment networks, USA Network, Sci-Fi, Oxygen, Bravo,
or not include the news. Or not include the news.
I think at this point it's all on the table, but I think a lot of people are looking now at what that would ultimately mean. What does it mean for growth of that business if you spun it off without too much debt? What does that business look like versus the cable business?
Business that still kicks off a lot of cash.
Et cetera. Yeah. So a lot to chew on this morning. A little bit of Homer news, if you will.
Cheese will be next.
Still to come on Squawk Pod, more of that big interview with Starbucks CEO Brian Niccol. He's about 8 weeks into the job, but he's clear about the work ahead. He's got a plan for a turnaround.
What I'm really excited about with Starbucks is I think most of the issues we're dealing with are very fixable and are in our control.
What he's thinking and why it might end up with cheaper coffee for you. Welcome back to Squawk Pod. Starbucks' new CEO, Brian Niccol, made his case to investors and to Wall Street yesterday.
I would like to welcome everyone to Starbucks' fourth quarter and full fiscal year 2024 conference call.
Almost 8 full weeks into a job that he was directly recruited to by the Starbucks board, Niccol's goal is to get Starbucks back on track following 3 straight quarters of sales declines.
With that, I now have the privilege of turning it over to Brian.
Thank you, Tiffany, and good afternoon, and thank you for joining today.
His first steps are focused on the customer experience in Starbucks stores.
We want to hand deliver a high-quality, handcrafted beverage to our cafe customers in 4 minutes or less, and deliver orders on time for our mobile order and pay customers every time. We have work to do to achieve this consistently.
I'll toss it back to Andrew now with the rest of the highlights from his big, exclusive interview with Brian Niccol, the CEO's first TV interview since swapping Chipotle bowls for Starbucks cups.
I asked him about the relationship with baristas and the efforts to unionize some of these stores.
What I've shared with all of our partners, and specifically the folks that work in our stores wear the green apron, is I want to create the best barista experience, in-store experience for our employees. We just announced we're going to be focusing on promoting from within at a rate of about 90% so that their career grows with the company as well. And I also think that when we give the partner experience, a terrific everyday experience, that results in a great customer experience. And that's what I want to have happen. Is I want our partners to thrive, and I want the business to thrive.
Brian's policy around return to office made a bunch of headlines earlier this week. We talked about it here on the broadcast, and I asked him to explain his point of view on that policy.
I was actually surprised by the news. This is a policy that's been at Starbucks for, over 2 years. And I think I've been pretty consistent on this. I think, first of all, to do your job really well, I think there's a piece of this where you have to be in the office, building the culture, experiencing the brand with each other. And I think that's when we're at our best. And, return to office continues to get a lot of great headlines. In this case, this was a headline that was looking for a story. There really is no story. It's the same 3-day-a-week policy we've had. And look, here's what I tell you. You've been to our offices, Andrew. They're fabulous. Like, the culture's great, the coffee experience is great, the people are great. I don't know why it's such a big story.
Right.
I like spending my time here. I enjoy it while I'm here. And it gives me a lot of energy.
It sounds like it sounds like maybe you're going to then enforce the policy a little bit more strictly than you have. Do you expect people to leave?
Look, people can make their own decision. I'm kind of a rule follower. We have a policy. There's a reason why there's a policy. The expectation is people follow the policy. So, I think people should follow the policy because there's a reason why we have the policy. And if you want to be a part of Starbucks, that's one of the things that's to be a part of Starbucks. You got to contribute to the culture, you got to show up, and you got to bring a positive energy.
Really actually get into the balance between the mobile piece, which is actually in its own way created great growth, but also great challenges because it is upset in many ways what's happened in store because so many people come in store and find that they have been deprioritized by somebody who has used the mobile ordering app.
Look, he is a great manager, a great operator, but people think you have a kitchen sink and then it's straight uphill from there. This is going to be a longer battle because he has to undo some things that have been put in place for years at this point.
There are a whole bunch of analysts who've tried to map on the timeline of what he did at Chipotle to see if that's the kind of thing he could do at Starbucks, whether that timeline makes sense. Part of Starbucks' new strategy is to try to make the menu less complex, but I asked him about how he plans to tackle the more complicated drinks because historically those are some of the highest margin items.
A brewed cup of coffee, that's a highly profitable transaction. And we would be delighted to have more of those happening in our business. And oh, by the way, coffee, probably the best health and wellness drink you can have. Based on everything I've read and what I've learned more and more about being at Starbucks. So I think selling the idea that we are committed to coffee and educating people on what we do from the farm all the way to the moment it gets in your cup, I think is going to really excite people. The customization and making the coffee or the drink personally yours, that's something we're going to continue to do. But we are going to put some guardrails on some of the customization because some of it, frankly, ruins the beverage and it really ruins the experience for everybody involved. So we have to strike a balance to make sure we protect the integrity of the drink, the integrity of the experience, and then get people still that personal experience that they're after.
You're a food guy. You came with a food background. What should the food at Starbucks be? I think this has been a perennial question.
Yeah, look, I would love for people to learn more about what actually goes into our food. And I do think we probably have an opportunity to do less breadth and fewer items better. And, I think we have the opportunity to make the world's greatest croissant. I think we had, I just had some egg bites this morning. They're terrific. So I think we've got some items that we can make brilliantly. And I think we have to eliminate some of the breadth that we have because some of those are not brilliant.
I think you're going to see a real reduction in the kind of food, or not the kind of food, just the number of items. And oftentimes, if you know in the display, they only show you like one piece of food that looks like it's been there forever. And I think one of the things he wants to do is make it feel fresh. And so you see all of the food. By the way, Brian and I were talking about his go-to order. He takes a black Americano or a black coffee. But since he started at Starbucks, he says he now enjoys an iced Americano with a vanilla sweet cold foam. We should mention analysts on the street have been tracking the time it took for his turnaround plan at Chipotle to work. They tried to forecast what his plan would look like for Starbucks if they mapped that onto it. I asked him if he sees his work now at Starbucks as easier or harder than what he faced at Chipotle.
Well, I haven't seen the analysis, but look, I give the guys a lot of credit for trying to come to a conclusion. What I would say is, what I'm really excited about with Starbucks is I think most of the issues we're dealing with are very fixable and are in our control, which was also a lot of the similar challenges I faced at Chipotle. And so, what I'm committed to doing with Starbucks is figuring out where are these pain points. How do we knock those down, get them out of the way, get the right operating model in place, clean up the pricing architecture, share with people again what makes Starbucks so special, and then match it up with a great experience, whether you do it through the drive-through, mobile order, or you come into our stores. And, that is it's a pretty straightforward playbook. I'm confident that this team and the Starbucks organization is going to be able to deliver on getting back to Starbucks.
And we should mention, while the U.S. Business is his near-term focus, I asked him if he shares his perspective on the Chinese market, given with folks like Howard Schultz, given that same-store sales in China in the last quarter were down by 14%, and what should happen to that business?
Challenged, right? We've got a tough macro environment. Competition has really ramped up, and the business, frankly, hasn't performed the way we had hoped it would perform. But that's not to say that I don't believe, and I think people would share this sentiment, that the Starbucks business is going to be a much bigger business than it is today. It's going to go well beyond 7,000 stores. I'm heading over there for the first time in like the first or second week in December. I'll have some opportunity to spend time with the team. And that's where we'll better understand, the growth plans and, what is the right partnership that we probably put in place going forward strategically so that we can grow smartly in China and get that business what it needs.
Is that something, there's been speculation, is that something that should be spun off, should not be wholly owned, should be in partnership with others? Do you have a sort of sense about that?
Look, I think there's a real opportunity for us. We've talked about this, right? We're evaluating strategic ways to grow there. I think we're going to want to continue to have a piece of growing the China business, whether that means we do it by ourselves or whether we do it with a partner. That's what we're evaluating right now. And I think I've seen a lot of examples of companies have great success where they bring a partner in and then they do it together. And, I'm optimistic for where China can go. And then I think we have to, I have to get more up to speed on the business. And then we have to smartly evaluate what is the right way to structure the business going forward.
Going to focus on those sentences just now as they try to watch this space as what happens next with that China business. Finally, we got into a conversation about his plan to bring back the personal messages on cups.
We're going to get back to doing that. We're tracking down the Sharpies, and we're going to get back to, writing little notes on the cups. It may not be everybody's name because, but we will definitely be getting back to writing on cups again here in the not too distant future. How many Sharpies do you have to buy? I thought the number I heard was something like close to 200,000 Sharpies we got to track down. Wow. Unfortunately, it's not as simple as just going to the Staples and picking up some Sharpies, but that's the power of our scale.
200,000 Sharpies. You might want to go buy. Who makes Sharpies? Maybe you want to go long that company.
Is that 3M?
Is that 3M? Well, if you're going to get a big order, big Sharpie order.
I thought it was 3M. The black Sharpies?
I think you got to use a black Sharpie, unless you use a silver Sharpie.
Blue?
You could do that.
Newell Brands.
Up next on Squawk Pod, it's in your kitchen and your bathroom and your living room and on the stock market. CEO of SharkNinja, Mark Barrocas, is selling something for almost everyone.
We are in vacuum cleaners, we're in robot vacuums, we're in blenders, as you said, we're in ice cream makers. We're entering into so many new categories.
You're listening to Squawk Pod with Joe Kernan, Becky Quick, and Andrew Ross Sorkin.
Stand by, Joe. His mic, cue.
Good morning and welcome back to Squawk Box, live from the NASDAQ market site in Times Square. They're going to start doing this. We all better be ready all the time because we were on a 3-shot right away. I'm Joe Kearney, along with Becky Quick and Andrew Ross Sorkin. Oh, wait a minute. See, I just read the prompt. It's Kernan, isn't it? Have I got that? Yeah, have I got that right? I think it's Kernan.
SharkNinja reporting earnings this morning, beating expectations on the top and bottom lines, as well as raising its full year 2024 net sales guidance, citing growing momentum into the holiday season. Joining us right now is SharkNinja CEO Mark Barrocas. Good morning to you. I think I was actually trying to count. We definitely own a SharkNinja blender, and literally on my Instagram this morning, I saw a couple people with the ice cream machine. So it's nice to see you. Tell us what's happening here, because it's been sort of a remarkable story. We talked about the stock hitting an all-time high, but how are you doing it, and what's happening with the customer, especially at a time when, it's funny, we keep talking about how strong the economy is, but how people feel that everything's too expensive.
Well, look, I mean, we've had a great quarter this quarter. I mean, we grew our top line 35%. We grew our bottom line 26%. And that's in a market that is flat to down overall. So we think that our 3-pillar growth strategy of gaining share in the existing categories that we're in, expanding into new categories, and growing internationally is really resonating and working. You mentioned the consumer. The consumer is looking for the best product at the best value. And I think that's what SharkNinja has been able to deliver, and that's why the consumer has really responded and resonated with our products.
Where are most of your products manufactured? I ask because obviously there's going to be a big question about tariffs, depending on who you think is going to be the next president of the United States.
Yeah, well, look, we can't predict what's going to happen on Tuesday, but we've been preparing for this for the better part of the last 5 years by diversifying our global supply chain. In fact, today, I mean, we have tariffs, China tariffs on a number of our products that come into the United States, and it hasn't impacted either our gross margins or our average sell prices to consumers. In fact, by the end of 2025, all of our U.S. products will be able to be made outside of China. So that diversification effort started 5 years ago, and it's continuing to accelerate now.
What countries have you moved to, by the way?
Yeah, we've moved primarily to Southeast Asia, Vietnam, Thailand, Indonesia, Cambodia. Those are really the markets that we're focused on.
In terms of where the growth is coming from, how much of it is these different appliances in the kitchen, the stuff I'm seeing that seems to be very popular, where people are making, ice cream at home and buying more blenders and things like that, versus a lot of now home products that you have, if you will, the vacuum cleaners, the hair dryers, all of that?
Yeah. Well, Andrew, look, we're in 34 different product categories. We go to market under 2 multi-billion-dollar brands that we created, Shark and Ninja. We've never acquired $1 of revenue in the company's history. The business over the last 16 years has grown at a compounded annual growth rate of 20% a year during that period of time. So to put it into perspective for you today, Ninja is the fastest growing outdoor cooking company in the world today. Shark is the fastest growing hair tools company in the world today. So when you think about the contrast of those categories, we are in vacuum cleaners, we're in robot vacuums, we're in blenders, as you said, we're in ice cream makers. We're entering into so many new categories. We just launched a product called the Shark Cryo Glow. It's our first launch into the skincare space. Our Ninja Slushy product, frozen drinks at home, that product has only launched 6 weeks ago, and it has 200 million impressions already on social media. So it's this consumer problem-solving innovation. It's driving consumer demand that we do through our advertising and our marketing. And it's our dominant omni-channel strategy where we sell our products direct to consumer, online, and in every major brick and mortar retailer.
Hey, Mark, you're You beat expectations, you raised guidance for the full year, and yet your stock is down 8.5% right now. Why is that? I'm trying to look through. I see your cash and cash equivalents were down to 127.9 million. Inventory's up 53.8%. What do you attribute the drop in the stock price to this morning?
Well, look, our business has really strong momentum behind it. I mean, we just grew our business 35% in the quarter. Our guidance shows that we're off to a strong Q4 holiday season. We're focused on delivering long-term investor value, and we're focused on delighting consumers. And, the stock price is kind of out of our control on a day-to-day basis, but we think that if we keep driving our playbook of disruptive innovation, delivering it to the consumer with high quality and at a great value, the consumer will respond, and ultimately investors will respond as well.
Mark, I want to thank you for joining us this morning. We'll keep our eyes on the stock today. Thanks.
And that's Squawk Pod for today. Thank you for tuning in. Squawk Box is hosted by Joe Kernan, Becky Quick, and Andrew Ross Sorkin weekday mornings on CNBC at 6 Eastern. To get the smartest takes from that TV show right into your ears, follow us here on Squawk Pod wherever you're listening now. We'll meet you right back here tomorrow, and happy trick-or-treating.
We are clear. Thanks, guys.